Hello everybody, this is Lara with your weekly video for Bitcoin for the week beginning Monday 5th of December 2022. I'm still expecting Bitcoin to consolidate sideways and then a short final fifth wave down is expected to unfold. The target zone for support remains the same, 13,556 to 12,417. I expect this next low should most likely be the very last low in the bear market. When it's over, I'm expecting a third wave at primary and cycle degree to begin, which should move price higher quite swiftly, although I do expect it also will start out slowly, because that's normal behaviour. I will update monthly charts after December, so I've got November, December to update. Updating every month sometimes just really does feel like a bit of overkill, so I link back at the start of every week's analysis for you to the previous monthly charts. You'll find text charts and the usual video there for monthly charts. At the weekly chart level, I see for all my wave counts, cycle wave 2 over here. And to fit this into context, you need to put it into the monthly chart because Elliott wave is fractal. When 2 ends, 3 begins. Cycle wave 3 may only subdivide as an impulse, which will be labelled at primary degree 1, 2, 3, 4, 5. Primary 2 may not move beyond the start of 1, below 3191.3035. When it's over, primary 3 must subdivide as an impulse, may not be the shortest out of 1, 3 and 5, and must move beyond the end of 1. Primary wave 4 must then unfold and must remain above wave 1 price territory, and there's usually quite a gap between the fourth and the third and first waves. They don't usually, for Bitcoin's large movements, they don't usually come particularly close. When 4 is done, then 5 must be a 5-wave motive structure and usually moves beyond the end of 3. And for Bitcoin, fifth waves are usually the longest and strongest portion of the movement, particularly a fifth wave to end a third wave 1 degree higher. So primary wave 5 is expected to be the strongest portion of cycle wave 3. Now, strongest and most support from momentum, and longest, but also the fastest. So they're really, really swift movements, vertical spikes that's coming up in several months, maybe more than a year away. We can use these Elliott wave rules to inform our investing. I'll be looking to buy some more cryptocurrency when Bitcoin forms its next lows. Not necessarily Bitcoin, I'm a little bit heavy on that, but I do have a few other coins, and I expect overall they may not be perfectly correlated, but generally speaking, when they're all when there's a strong bull market, and a lot of my Elliott wave counts for them are quite similar, then I expect them to mostly move together. So I'm waiting for Bitcoin to bottom out, and then I'll be looking at some other coins. And I want to buy because I'm still in wave 1 price territory, and a lot of the other coins I've purchased have really similar wave counts. And these are the Elliott wave rules I'm using. So 2 may not move beyond the start of 1, so I can expect that this is my final risk, so that's my risk assessment. 3 has to move beyond the end of 1, and when it's over, 4 must unfold, may not move back into 1 price territory, and then I expect for these coins, for cryptocurrencies, the fifth wave to be the fastest and longest piece of movement to end cycle 3. Those rules mean that anything purchased within wave 1 price territory can be held throughout 3, held throughout the consolidation or pullback of 4, in order to get the gains of 5. So it's a long-term, very long-term outlook I'm looking at here, holding for years. And so those are the rules I'm using to inform my ideas to buy as close to these lows as I possibly can. The target for primary 2 remains the same at 13,556. Minor C would reach 0.382, the length of minor A, and at 12,417, intermediate Y would reach equality in length with intermediate wave W. This target zone brings price down into a really normal range for a cryptocurrency. It's really common for their big second waves to correct from 80 to 90% of the previous wave they're correcting. So here is primary wave 1 at 16,310.97. Primary 2 would reach 80% of primary 1, and at 9751.14 it would reach 90%. the length of primary wave 1. They can be even deeper than this. That's absolutely normal behaviour for these markets. They have very deep bear markets, but overall a bullish bias, particularly when you look at it on the monthly chart. Let's take a look at the first daily chart now, where the high of minor wave B, or actually it might be off to the left of the chart, the high of minute wave 2. Oh no, here's minor wave B. So now we're looking at the whole structure of minor wave C unfolding as a 5-wave impulse. An impulse for minute 1, a double combination for minute 2, a sharp impulse for minute 3, a correction unfolding for minute 4, and I have 2 wave counts for it. This first chart and the second daily chart, I'm labelling them first and second, not main and alternate, because I'm not going to judge which one's more likely. They're both expecting some more sideways movement within this narrow range. Important to note here that minute wave 3 is actually shorter in length than minute wave 1 by 592.76. That's important because one of the Elliott wave rules for the impulse of minus C tells us this third wave may not be the shortest out of 1, 3, and 5. Sometimes that's misinterpreted to say it has to be the longest. That's not what the rule states. This rule states it can't be the shortest. So when a third wave is a bit shorter than the first wave, that tells you that the fifth wave is limited to no longer in length than the third. So minute 5 will be limited to no longer than 5898.36 in length. When we know the end of the fourth wave, I can calculate that actual price point where minute 5 is limited to not go below. I can't do that yet because I don't know where 4 has ended. Minute wave 4 may not move into wave 1 price territory above 18644.47. At the daily chart level, these two charts are identical except for this portion here. Now I'm considering a different structure. Actually, I quickly need to explain that structure, don't I? This first structure considers minute 4 as a flat correction, A, B, C, to subdivide 3, 3, 5. So minuet C, 1, 2, 3, 4, a little fifth wave, needs to move beyond the end of A above 18113.28 to avoid a truncation and a very rare running flat, but can't move above 18644.47 so that 4 doesn't overlap 1. But what if minute wave 4 is a running triangle? It could be a running contracting or running barrier triangle with A, B, C could possibly be over, needing D and E. C, if it moves any higher, may not move beyond the end of A above 18113.28. D, if it moves lower, if this is a contracting triangle, may not move beyond the end of B. If it's a barrier triangle, D should end about the same level as B so that the BD trend line looks essentially flat to the eye. That involves a degree of subjectivity. It's the only Elliott wave rule that isn't absolute, annoyingly. And then finally, when E is underway, it can't move beyond the end of C. So this wave count expects a sideways movement in an ever-decreasing range. So this is like a large pennant pattern that would maybe expected to be unfolding. And when minute 4 is over, a short, sharp minute wave 5 may then be expected. Movements out of triangles are commonly very strong, but often really short. So this wave count might see this target a little bit too low. The upper edge of the target, certainly for this idea, may be a little bit more likely. At the daily chart, at the weekly chart level, this is an alternate wave count. This is pretty popular, but it has a really low probability now. And after this more downward movement here, it's got an even reduced probability. The problem here is if we see primary 1 over with intermediate 1, 2, 3, 4, and 5 to unfold, 4 is now over twice the duration of 2. It's normal for cryptocurrencies, including Bitcoin, to have second waves that are longer lasting than fourth waves that are more brief than second waves. This is absolutely typical for an impulse for any cryptocurrency: brief fourth wave, more long lasting second wave. But here the fourth wave is more long lasting than the second wave. It's the other way round. It's unusual. It reduces the probability given the price history and behaviour of these markets. If intermediate 4 continues lower, it may not move into wave 1 price territory below 13826.76. It'd be great actually if this price point is broken, as the main wave count expects it could very well be, given the target. If that happens, at least we'll have clarity at the weekly chart level. Excuse my neighbours. I'm also going to consider the possibility that primary 2 could be over. It's possible we can see a complete Elliott wave structure. This wave count doesn't have good support from classic analysis. This is the same as the first weekly chart up to this high, seeing primary 1 over here. It's possible primary 2 could be a complete double zigzag. What we need to see to have confidence in this wave count is a new high above 18644.47, because that would invalidate the main wave count, and an obvious breach of this channel that contains all of the bear market, or at least provides resistance and is really, really conservative for resistance. I prefer a very conservative channel. If we see a full daily candlestick above this trend line and not touching it, then we can have some reasonable confidence the bear market is over. It will end, and I'm expecting it to end within the next month and a bit, maybe a little bit sooner, but not quite over yet. Another buying opportunity coming up, I think. At the weekly chart level, there is some bullish divergence at the last low between price and on-balance volume, price and RSI, price and money flow index. RSI reached oversold. It's only done that once before in Bitcoin's price history in 2014 on the weekly chart, and that was accompanied by a low that's been sustained to this day. So that's pretty bullish. It doesn't mean that we can't have another low though, but it supports the view that if the bear market's not over here, then the final sustainable low is most likely coming up sooner rather than later. This is pretty bullish, but I do not see bullish candlestick patterns. Now we've got 3 completed little weeks, really small range, very weak, a tiny increase in volume for the last completed upward week. It's such a small range though, I'm not seeing what I call strength off lows. I just don't see it here. I don't think that this is a sustainable low. This back here looked more promising, but it turned out not to be. I'm not seeing real strength at this point. After a selling climax, it's pretty common to see these markets consolidate and then go on to form another low. And if after that happens, we see further bullish divergence, I'd then have some confidence in a sustainable low. On balance volume has that bullish divergence. ADX indicates a downward trend at the weekly chart level, and there's quite a long way to go before that could get extreme. We've been over these two. ATR declining, pretty normal toward the end of a bear market. Stochastics still oversold, and I leave this here. There is no reliable correlation between Bitcoin and the S&P 500, so it would not be reasonable from a mathematical point of view to assume, based on your analysis of one market, that the other has to do X, Y, or Z. It's not a reasonable assumption. I will just stick with facts and data and not assumptions. I don't like making assumptions about markets. They're going to prove you wrong if you do that. At the daily chart level, there's a little bit of bullish divergence here on a closing basis between price and RSI and price and money flow index. It's pretty weak though. There's a strong candlestick here. It's a piercing pattern, but it doesn't have support from volume. Not always a deal breaker for cryptocurrencies, but it hasn't really been followed through by much. We've got another deep pullback here, ever so slightly a lower low, and now this upward movement really does lack push from volume. These two candlesticks had weaker volume. This candlestick, this has got some push from volume. It's only one small day though. I'm just not seeing real strength off these lows. Look for resistance to probably hold for now about 18,500. On balance volume also is constrained and has mostly a sideways look, while price is also moving sideways, but overall a bit of upward movement here, and on balance volume's just moving sideways. There's now some reasonable technical significance to this resistance and this support line, so let's watch for a breakout from this zone. On balance volume might possibly provide us a signal by a breakout prior to a breakout from price. Sometimes it does that, which is super handy. ADX is declining after telling us at the daily chart level that downward trend did reach very extreme. It reached 45 and it was above both DX lines. RSI, money flow, both neutral. Stochastics overbought and ATR declining. So with no clear trend and stochastics overbought, I'd expect price may be about resistance, which could be developing about 17,500. Let's look for a downward swing within this consolidation. That's all from me with your Bitcoin analysis this week. I hope everyone's had an awesome weekend. I'm in Peru now, have a really good internet connection here. In a couple of days, we'll be heading further south in Peru to surf Chicama, the world's longest wave. So that's a massive highlight. And we have some good accommodation with air conditioning and internet. So work should be completely uninterrupted. Thank you so much for your patience.